Yes, welcome back here on the campus. And first of all, Happy New Year. I hope you started the year just as well as we did. On this first day of the year, I want to take a look ahead at the crypto year 2026. We all know that history doesn't repeat itself, but it often rhymes. And that's especially true for Bitcoin, which basically sets the tone for almost all other cryptocurrencies. So it makes sense to look at the cycles, and I can promise you this is going to be really interesting. So definitely stay tuned. Here on the weekly chart, we see Bitcoin's price development from 2013 until today. I've measured the time spans from cycle top to top, from the all-time high in 2013 to the all-time high in 2017. It took 1,476 days. From the 2017 top to the 2021 top, it took 1,425 days, and from 2021 to the high in October last year, it was 1,427 days. So we almost always see the same time intervals with extremely low variance, and what applies to the tops also applies to the lows. From the low in 2015 to the low in 2018, it took 1,434 days. From the 2018 low to the 2022 low, it took 1,437 days. So again, almost exactly the same time intervals. And if we assume that market behavior rhymes, then we can simply take the low of the last bear market on November 21, 2022, and roughly 1,435 days, and we get a projected date for the next possible bear market low. It's October 26th of this year. It doesn't have to be the exact day, of course, but it gives us a rough orientation of where things might be heading. For some of you, it may sound alarming that we could see a bear market this year, but we should remember that a bear market usually consists of three parts. In my view, the first part is more or less completed, and in the coming weeks and months, we can expect a bullish counter move. Overall, I expect a bullish Q1 and possibly a bullish Q2, at least partially. And what this could look like, we'll take a closer look right now. In the last bear market of 2021 to 2022, we had a typical Elliott wave ABC correction, with wave A lasting 97 days. At the bottom of wave A, almost all momentum indicators were oversold. And you can see that clearly in the stochastic RSI and also in the other momentum indicator. Looking at the current situation, I assume we've been in a wave A for 87 days now, and again, we see that the key momentum indicators are completely oversold. It wouldn't surprise me if we see a slightly lower low in the next days or weeks before a 3 to 4 months bullish counter move begins. At the peak of this B wave, everyone will be saying the bear market is already over and we are heading straight for 200K, which I consider unlikely. On the contrary, after this B wave rally, I expect a strong sell-off toward the middle or end of the year. Which price levels we can expect within the B wave and where the bottom of wave C might form, we'll look at in another video here on the channel in a few days. So if you appreciate solid objective analysis, then you're in exactly the right place. Subscribe to the channel and stay well informed throughout 2026. One last note, what I presented today is an analysis combining Elliott waves, indicators, and cycle theory. In my view, this scenario is by far the most likely one. However, you should always stay open to alternatives and remain objective. With that said, take care of your hangover now, enjoy your evening, and see you in the next time. Ciao, ciao.